Welcome back, investors. Today we're going over Lucid Motors. This stock is down 13% today after that they revealed that the Securities and Exchange Commission has a subpoena on their merger back when Lucid was CCIV or Churchill Capital Corporation. We're going to be talking about this, whether or not you should be buying the dip, as well as the move in other electric vehicle plays such as Tesla and NIO. So stay with me and we'll talk about all that. Welcome back to another video. If you enjoy this video, please be sure to give it a thumbs up and subscribe if you haven't already. I just want to show you the move that I've made in Churchill Capital Corp back when it was CCIV, before it merged with Lucid. So basically, I had two price points. My average cost for one of them was $18. I sold at $56 for a gain of $1,015. So that's basically 200%. That was my book cost, was $500. And the next one was just kind of like a short-term play. The average cost was $22. I sold at $26 for a gain of only $59. And just to be clear here, this is like the amount that I'm comfortable with investing in kind of like a volatile stock like Lucid. They've kind of followed the trend a little bit in like Tesla. They've skyrocketed, kind of gone down. And there's just so much volatility in this that I find that you can earn a lot of money in a relatively short amount of time, especially when you swing plays. So if you're interested in finding out more content, please feel free to check out the Discord where I talk about my real-time buys and sells, as well as my Patreon if you want to get them in real time. But the Discord is totally free down in the description below. So those were my two plays with Lucid or CCIV before the merger, and I haven't bought back since then. And we've seen obviously a massive rise. Right now, the stock is trading at $41. So even if I kept it, I mean, I could have almost doubled my money right now, even with this like 13% drop. But let's talk about this move. I just wanted to be fully transparent there. So basically still sitting at a $67 billion market cap, even though they haven't, it's still kind of a pre-revenue company. They're just starting to roll out their vehicles, and there have been some very, very positive reviews. It actually received, I think, like the Motorsport like Car of the Year, and that's why, you know, over the past month specifically, I guess over the past month it was down by 9%, but this was like an $18 stock just in September, and it skyrocketed by over 160% to reach not its peak, but $55. Before kind of taking a break and going back down by 26%, and now sitting at $40. And I think, again, this move is too fast, too soon. That doesn't mean that we won't see this move again, but if you're looking at even like the max price chart, so I bought it when it was around 18, rode it all the way up here to, it was $56 when I sold, and then kind of, I played it again. I bought it back at 22, like I said, and then sold it at 26 for a nice little gain there. And I'm not thinking about buying the stock until at least it's below $30. A lot of people are already holding the stock and are very, very bullish in terms of where this company is going. I mean, this has a $67 billion market cap, and it's a loss-making company for a couple of years into the future at least. And same thing goes for Rivian. Rivian is even more on the back foot, where it's totally a pre-revenue company, and it has over $100 billion market cap. And I think that, you know, I'd have to guess it's like we're in a bubble, and I don't feel comfortable in investing in Lucid right now, especially not at the given price. You might disagree, that's totally fine, but that's just my opinion. I will not be touching Lucid for a while until it's at least below, you know, $30. It might never get there, but it might. We'll just have to see the way that the market shakes out. And especially if Lucid goes lower, there's this thing called tax loss harvesting, where you can sell a stock at a loss before January 1st and basically write that off as a tax loss, and will go against your taxes to basically lower your taxes. So if this stock continues to fall, and many people bought it when it was about $50, they might consider selling and then buying 30 days after just for tax loss harvesting, especially if the overall markets are weak. And we've seen, especially with small caps, that the price of those have just gotten absolutely destroyed. And I do think we are in a little bit of a bubble when it comes to electric vehicle makers. So Lucid shares drop amid SEC subpoena over SPAC deal. So they opened 12% lower on Monday after the high-end electric vehicle startup revealed it received a subpoena from the SEC over its recent tie-up with a special purpose acquisition company, which was CCIV Churchill Capital. Lucid received a request for the production of certain documents related to investigation by the SEC, according to a regulatory filing. This inquiry is related to the startup's merger with CCIV and certain projects and statements. The company is cooperating fully with this SEC in its review. And again, this is a relatively big company. Trading at $41 is not a joke. 67 billion market cap is really not a joke. Lucid went public on July 26 upon the merger. That day, Lucid closed at $26.83. Even prior to that listing, Lucid was closely watched and followed by retail traders. And we saw what happened with the surge. So in September, Lucid stock soared after the company's Dream Air Edition vehicle received an EPA-rated range of 520 miles, which is longer than the longest range sedan from Tesla. That's about 100 miles more than Tesla's Model S long range. So that's really, really cool. And Lucid showcased the first deliveries of its luxury vehicle in late October at an event in California. Only a handful of analysts cover Lucid. The stock has 2 buy and 1 sell recommendations. I mean, it's looking more and more attractive as Lucid drops a little bit more and more. I think it's because it is a favorite of retail traders. This stock, again, like we've seen, has a very wild ride. If you're just looking at the past 6 months, I mean, all the way from 55 back down to 40, and we'll see where it settles down in the interim. But again, I won't be touching this stock until at least it's below a 30. Then I think the cost benefit analysis is in my favor, especially if interest rates rise and there's a little bit of a taper tantrum that's going on when bond buyback from the government decreases, interest rates rise, and high growth stock like Lucid get kind of destroyed in that environment. So as we can see, next year, 2022, they're projected to do an increase of 2,300% in terms of its revenue based on 3 analysts' expectations here. So right now they're doing about 83 million in revenue, at least for 2021. They're expected to do 2 billion in revenue in 2022. That's still a ridiculous price to sales ratio. If you're considering, let's say, market cap of 60 billion, I know it's 67 billion, but let's 60 billion for argument's sake. You divide that by the forward revenue of 2 billion, that's still a 30 forward price to sales ratio, which to me is incredibly expensive, especially when you're looking at some of the other kind of high growth deals out there, right? Instead of Lucid, I like Hyliion stock because it's trading at a really, really cheap multiple. The price to sales ratio, I believe, is closer to 1 on that. But not a lot of people are talking about Hyliion, right? And it's only a 2 billion market cap. So it was a favorite of retail traders before it kind of got dumped for other stocks. But still, amazing growth. Despite this, even if it goes and it has 2 billion in terms of its sales, I think that there are better opportunities in the market. Again, that's just my opinion. Let me know down below in the comments what you think. A lot of people are viewing this stock right now, 185, 136, which is quite a bit for even a company like Lucid. And basically, the reason why I think this stock crashed is also, okay, sure, the SEC probe, but also because it rose too fast too soon, because this car has been a hit with customers and reviewers, and the company expects to be a leader in EV technology. As we've seen, it has a longer range than the Tesla long-range Model S, and its record battery range was a notable first step. It also won the Car Award of the Year. So again, the reason why the share soared by 43.2% for the month, according to data from S&P Global Markets. So the company delivered its highly anticipated first vehicle on October 30th. They had an successful initial IPO. Well, it wasn't an IPO, it was a SPAC deal. I guess the successful IPO of Rivian, less than 2 weeks later, also led the surge in EV names, including Lucid. And I mean, we can see right now Tesla not doing, incredibly well today, $970 over the past 5 days, down 15%. Also on the news that basically Elon Musk sold about $10 billion worth of his shares in Tesla, but still over the past 6 months, over 60%. I mean, $1,200, that's just like kind of ridiculous. And NIO, another maker in China, is down by 20% over the past 5 days. Over the past month, down 26%. So EV stocks are not looking too hot, especially not in the short term. And I mean, they tend to rise and fall together as well. And NIO has a market cap of 50 billion. Tesla has just now under a market cap of $1 trillion. So where were we? We were right here. Okay, so then on November 15th, the company released its third quarter financial update. It told investors that in just the 6 weeks since the end of the third quarter, customer reservations for its Air sedan jumped 30%. Lucid announced vehicle was awarded the prestigious 2022 Motor Trend Car of the Year award, which also saw Lucid's share jump by quite a bit. It'll take more than just praise and rewards for Lucid to live up to its current market cap of nearly 78 billion. Right now, it's about 67 billion, if I'm correct, 66 billion right here. But Lucid believes that as an EV tech leader, it will grow into much more. So CTO officer Peter Rawlinson came from rival Tesla, where he led the engineering development of the Model S. And Rawlinson, which is, I believe he's a CEO. He's a CEO and CTO. And Rawlinson quickly made his mark with Lucid as its 169,000 Air Dream Range Edition and earned a record 520-mile rating from the U.S. Environmental Protection Agency. That's more than 100 miles over Tesla's Model S range. So of course this car is not cheap. It starts out, I believe, at like close to $100,000 and goes like way up, right? So right now it's not affordable for the mass population, only for kind of like the elite. But I mean, still, like, there is interest in their car, especially, I mean, it won the Motor Trend Car of the Year award, which is really cool. It has longer range than Tesla, so it has a very competitive advantage. And it's trying to get a luxury SUV into the works beginning in late 2023. The company plans to reach almost 10 billion in revenue for 2024. So even 10 billion in revenue with a 70 billion market cap, that's still 7 price to sales ratio in 2024 terms. So I think that's just ridiculous. And I think that, you know, the market needs to take a step back here. It's just like, wow, okay. It's quite a bit to just process. And let me know what you think again below in the comments. I just wanted to share this news with you. So pretty much Lucid also plans to branch out beyond automobiles with its proprietary engineering and tech. It intends to leverage its battery tech expertise for applications in energy storage systems, as we've seen happen with Tesla. Now, if this plays out, this could be literally a multi-trillion-dollar opportunity if you're talking in terms of battery storage, especially if it has proprietary tech, it could sell that. And so, you know, like Tesla, it will become more than just a car company. However, I think with the current valuation, I will not be touching Lucid. I want it to sort of come back down to earth. Maybe if it, you know, halves in price to around like $25, $30, I could potentially be a buyer of Lucid, especially because it's volatile. So I think you could play this like crazy. Investors should still go in with eyes wide open. Lucid stock remains speculative, and the company still must prove it can execute at scale. And we've seen a ton of problems when Tesla was trying to execute at scale. But, you know, they've succeeded. And I think because Peter Rawlinson, he has such a good history, they could also be able to execute properly. But anyways, it was off to a fine start, and it's holding $4.8 billion in cash as at the end of the third quarter. That helps explain why aggressive investors bid shares up as much as they did in November. So again, that's all I have to say right now. Again, Lucid trading at about 13% below what it traded as on Friday of close. Let me know what you think. Again, I appreciate if you subscribe to the channel if you enjoyed this video. I've made a bunch of videos. The last one, or not one of the ones where it was still a CCIV Lucid merger. The stock was up by 8%, which was $19. So if you want more content, you don't want to miss the next run up in a stock like Lucid, be sure to subscribe and like the video. So thank you so much. Take care. Love you all. And have a fantastic Monday.